Hey, hello everybody. How you doing? Welcome. Sorry, I'm just doing some closing for my weekly profit cycles people, just giving them a reminder. It is Red Shirt Thursday. Yeah, we have a little winter here and hopefully people are closing, but who knows? I let them know. All right, let's go. Yesterday, some of you, let me share my screen. And never done this before. All right, first, welcome to Option Pit. Hopefully you're doing okay. Market had, like in the news today, before we get into a couple of the indicators here, the market is like zipping back and forth here. I really don't know what the heck is going on. It's like literally moving in dollar ticks up and down and up and down and up and down. All I know is that these are some key things. Just Meta CapEx spending going up. Microsoft not giving up on AI. Now, as you recall, those are the things that drove stocks higher for 2 years. I view it as pretty bullish. Let's see Apple and Amazon tomorrow. But also note, what has VIX not done today? So if you were here yesterday, when we talked about the zones, do you see how VIX, even with this very good news, the market can't quite get out of zone 4? It's staying right here in a very annoying fashion. Right? Tried this morning, doesn't quite know what's going on, can't quite let it go. Here's another thing for you. Is volatility the same up as down? Meaning, is a 24 volatility up and down? Do they mean the same thing? Meaning, a move up 1.5% and a move down 1.5%. Is volatility up and down? WA, I don't know what you've been doing in my classes for the last 2 years. Volatility is the same up and it is the same down. So a 1.5% move up and a 1.5% move down is the same volatility. Keep that in mind. All right. So for today, what I want to cover is I want to cover the idea of up zone and down zone. And also here, I want to cover a couple of examples of Vixen contango, Vixen backwardation, and Vixen flat. The reason why is, and I want to write this here for you. Okay. And why does up zone matter? So right now, we've basically touched zone 3 for a second, and then we gapped up. So when you are going up zone, meaning you've touched a lower level and then rallied higher for VIX. Sorry, I just got reality of trading here is we keep bouncing back and forth and I can't tell. All right, I'm lowering this to 558 because this keeps tripping, but it's not actually trading there. And I believe I got a new high. Sorry, guys. The reality, when you have teachers that trade, I got to do this stuff. Market is exactly where it was yesterday at this time. Market for VIX is a little lower today, I think, than we were at this time. We're still in the fourth quartile, but the difference is understanding up zone. So up zone is what? It is, the market is moving, VIX is moving from a lower number, from a lower zone to a higher zone. Now, so why is this important, right? Because if this fades, if you have a move up zone and that move dies, you're more likely to go down to a lower, back down to the lower zone. So this is a more tradable move. That's the point. So what's meaning is you're going from zone 3 to zone 4, and the rally fades, just like it did today. We were in zone 3, we broke higher, and then our rally started holding up. This is a spot in my mind. You want to lean a little short VIX, even though it doesn't feel good. Just saying. So again, you can do it by strangle, whatever, but you buy a put, you lean a little short and buy a little bit of protection up top. Okay. So this is your basically trading an up zone move. You're going from a lower zone to a higher zone. You're crossing, right? So VIX is crossing from one zone to another zone. The reason why this is important is because you're getting very, let's just call it, this is a very touchy-feely part of the market. Meaning this is literally the most sensitive indicator. VIX up, VIX down is the most sensitive thing because it's giving you general sensitivity. Most of the time, VIX up zone is bearish. Most of the time. Is bearish SPY most of the time. So VIX going up is generally bad for stocks. So again, yesterday to today, we have an up zone move. The market, again, kind of waiting for earnings. We had sort of a power move in SPY. And now we're kind of so now, if you're thinking about it, why isn't VIX lower right now after this great news from Microsoft and Meta? Like, it's definitely lower than it was yesterday, right? A little lower than the close. Still waiting for Apple and Amazon. If you think about it, right, you got non-farm payrolls tomorrow, and you got Apple and Amazon tonight. So volatility literally is holding the sentiment of that information. And then tomorrow, what's going to happen? The information will come out one way or the other. It'll be interesting to see how low VIX can go today, waiting for that news to come out. My guess is it's going to be right around 24. Like, this is your move today. We might get a little more out of SPY. if traders like Meta a lot or keep buying Microsoft up, but it's going to be hard for VIX, right? Because VIX is holding a sentiment. So that's basically understanding up zone. Down zone, okay, down zone is VIX is moving from a higher zone to a lower zone, okay, or from the top in zone 4. So VIX has mostly been in a down zone move since what, last week? 2 weeks ago? Let me see. Let's go 30 days. Basically down, like, again, but you're still in the same zone. This is very hard to trade, by the way. If you're trading VIX, probably easier to trade SPY because you're still in zone 4, right? You're still in the lower quartile. You're not breaking down. This is essentially a whole different animal to trade. In option pit, like we teach techniques like that in pro and stuff like that, but it's very hard to trade VIX up here because strangely enough, the options really don't move a lot because VIX is moving a lot. SPY and options are moving a lot, but VIX options themselves are not moving very much, even though you're having these huge cash swings because the futures aren't moving a lot. We're going to cover that in the second half. But VIX, just because VIX is moving a lot does not mean the VIX options are moving a lot. So here, even though you have what I would call down zone, volatility has peaked and started down, there is less opportunity than you think in VIX options in this part of the game. Right? And one of the reasons why is the option prices are so high. So down zone. So down zone in zone 4 is not, I would say, is not a great VIX opportunity. Okay. There's a little, like, it is somewhat tradable, but you have to get a little, I would say, probably 30 or less. Okay. Because when you're at 30 VIX, going by this kind of rubric, what's your target? If you see a 30 VIX in your down zone, going by the zone concept that we learned yesterday, what would be your target now? If you're trading a 30 VIX, what would be your target if you're trying to buy puts in VIX thinking it's going to go down? Right? Your target's going to be around 24. So you actually want to see how your trade is priced between 30, where you're paying, where VIX is currently, right? And if it goes to 24, where it goes. How much can you make? So as a clue, I think the real money trading VIX options as price performance is from 24 to 16. Okay, that 8 points gives you usually your best dollar risk return buying puts in VIX. If it goes to 12, you're making a ton. Remember, that's almost a 50% drop. So while there's a lot of action going on, right, market moving all over the place, the actual money to make options in general in a down zone move 24 to 16. Now, yesterday we learned, right? Half the market, half the time we spend above 18 and half the time we spend below 18. So you're kind of crossing over that line, making dollars. So as soon as VIX starts to tickle 24 again or below, and I'll take a minute or two at the end to answer people's questions, okay? But the idea here is this is a sweet spot, right? So if you take anything away from this class, it's a sweet spot for setting up a short vol trade. Now, there are lots of short vol trades that you can do. But if you're going to go broad stroke and say, when is the best time? You're moving down zone, meaning you went from a higher zone already to a lower zone, and you're starting to break lower. And one of the reasons why you could be here and say, hey, VIX is 27, it can't go higher, right? It can't go over 27. And then you've got 2 weeks of misery while the vol blows up. So I find down zone type trading better if you just let it go down. Let it make this move. You're not doing a ton in this area anyway. In VIX, that is. SPY is a better trade, different set of classes. And that's basically what I would call the touchiest part of looking at VIX up zone and VIX down zone. So again, from a takeaway point of view, this is a great time to look at shorting vol because you avoid all of the other stuff that's going on. You're essentially waiting till it becomes an opportune time. Now, in the meantime, what helps you? So we only got about 10 minutes left. So what I want to do now is just cover the basic curves in volatility. So again, why does this matter? These are giving you very, very sensitive. These are the VIX up and down are just basically giving you almost real time, market up, market down. The VIX curve is giving you longer term sentiment changes. So backwardation in general, backwardation is a bearish SPX posture. Okay. In general, backwardation is bearish SPX. You can have all kinds of rips happening in the meantime, what they call bear market rallies, but generally backwardation, the market expects bearish SPX posture and zone 4 volatility. So yesterday we talked about realized volatility. Contango is generally bullish SPX posture, made basically like your bullish SPX, and lower realized volatility. Okay. So these are your expectations. Now I'm going to show you what the curves are here in a minute. And then VIX flat is basically, and this is a trade we did in weekly profit cycles yesterday because it was aiming flat. Like, I don't know where anything is going. So this is the market saying, I don't know where SPX is going. Okay. But it is going to move more than the volatility shows. Okay. So you have three basic market postures for vol. So let's look at backwardation first. I'm going to take a little picture for you here. As soon as I can find it. There we go. Okay. So this is actually getting very flat right now. I think a better curve was probably last week, because today's almost good for a let's go to, let's say here. So do you guys see this? VIX cash is way up here. All the futures are down here. Okay. This picture says hide in under your desk. Okay. This is a backward curve, very volatile. So when you see this curve, what do you expect? Generally bearish SPX, but very high realized vol. So generally, the market is expecting higher realized volatility than is actually priced. Right? Meaning we are going to move. Whatever you see today, we're 2% away, 2.5% away, 3% away. We're going to move big. Contango, which we haven't seen in a while, okay, is basically the opposite. It's been so long, I got to find a contango chart. I got to see. We have to go back before 30 days here. Hold on. Here will be a nice day here. The March 25th. Okay, March 25th. Let's see what we got here. Okay, totally different curve, right? VIX is very low and all the futures are higher. Okay. Contango is basically 80% of the time. Most of the, well, because the market's usually going up. Again, look at the expectation I just wrote here. The long-term expectation in Contango is what? Bullish SPX, lower realized vol in the short term. Okay, but higher volatility in the long term. Okay. VIX backward, we got high realized volatility in the short term with lower volatility in the long term. Okay. And I think today is a perfect example of VIX being flat. It's not my perfect definition of flat, but it's very, very close. Okay, my definition of flat is generally 1 point between the back of the curve here and wherever VIX is. And right now we're about 2 points. It's close. However, the entire VIX curve is about 1 point. It is very, very close. And I think the reason why is because we have news tomorrow. We got non-farm payrolls, you got big earnings and stuff like that. This is close to flat. It's like we're calling it a tweener, but I think for our purposes, it's a perfect curve, a perfect flat curve. And the reason why is because in a flat curve, the market's saying, I don't know where SPX is going. So tomorrow we could be 570 or 550, easy, 540, easy. And even though VIX is 24, it is likely the move is going to be more than that. Again, I don't know where it is, but we're going to move. Now, generally, a super flat curve is a little more bullish, or can be bullish, like we're expecting a hard move higher, which is a higher volatility move. So what this does is, so what I'm giving you here is these set the longer term market expectation. So a flat curve is still like, we're kind of going all, I don't know. We're going to be up. We're going to be down. Whoo-hoo, don't know. Okay. Deep backwardation is extremely high realized vol, which we've had over the last 3 weeks. Usually bearish, right? Now, we have had enormous bear market rallies. Okay, like sharp rallies. It can still happen. Like I said, volatility both ways. But you can see, right, if you see this difference between this curve and this curve, can you see things are kind of, they're slowing down a little bit, even though it's still very volatile from a historical perspective. It's not what it was 2 weeks ago. The market is not expecting it to be what it was 2 weeks ago. In general, I'm just going to say that I would lean a little more bullish SPX on that case. And then here, the contango we haven't seen in ages. Again, so what I'm giving you is slightly longer term expectations of what's going on. And then just up and down zone is time expectations of what's going on. All right, so people had some questions, which I will answer. Serge got his answer. $ in front of VIX for the indexes. I believe SPX is the same. Would the risk of selling premium in VIX calls be greater to the down zone or up zone when VIX is above 30? Again, for VIX selling call spreads, I would wait till you're a little down zone in zone 4, Asian 407. Just selling like in zone like 321 is, so I would say your risk is greater up zone for sure. Because you're like, when is the top going to be? Like you could have a month of backwardation. You could have 2 months. And then the last one here, how does VIX moving up affect the at-the-money call or put in equities? Generally, VIX moving up, you should see expansion. And there's opportunity when individual equity option prices are not moving very much, but VIX is expanding. That's a good opportunity. And that's something we look at in Trade Desk, basically. All right, it's 10:30. You got what's up zone, down zone, 2 definitions. And we have basic definitions of the VIX curve for longer expectations. When do I expect the VIX curve to turn into contango? Well, we need at least one major trade deal signed. But it has to be flat before it gets there. I'd say we have a dead flat curve once we have a trade deal signed. Just a guess. Quick look at Walmart. Can't do it. That is for Trading Desk, Hogan. It is 10:30. State of the market is this. We are done. Everybody, I'll see you next week. Oh, I'm going to tell you next Wednesday what the perfect trade for the FOMC is going to be on Wednesday, 10 o'clock right here. Show up, learn something new. What the heck? You got nothing else to do. Have a good day, everybody.